Welcome back to Power Lunch. I'm Melissa Lee, live at the Credit Suisse Blockchain West Symposium here in San Francisco, where the biggest investors and thought leaders in the world of crypto are gathering. Our next guest says blockchain technology can streamline the way banks on Wall Street do business, the way we get a mortgage, even request an Uber. Joining us now is James Disney, the global head of software investment banking at Credit Suisse. James, it's great to see you again.
Nice to see you, Melissa.
We last spoke in October about the ways Credit Suisse specifically could implement blockchain and help save the company money and transform the way it does business. Since then, there have been a lot of developments. It's actually being implemented.
That's right. Yeah, there's been a lot of innovation at Credit Suisse around the blockchain. In fact, we recently did a collateral trade between us and another financial services institution. If you think about collateral trades, that relates to liquidity and capital. Banks, by regulation, are required to hold a certain amount of collateral, and that collateral has to be high-quality liquid assets, such as U.S. Treasuries. So we're able to do one of those trades on the blockchain, and in doing so, we spoke a lot with regulators about it. What's interesting to them is that they're able to have real-time visibility into the collateral or capital that each of those banks have. And if you think about some of the issues that we saw in the last financial crisis, a lot of it was related to access to capital and collateral, and this should be an easier way to make that happen.
So how much can the bank save by doing this?
Yeah, it's difficult to quantify, but I think it's really a foregone conclusion using the blockchain in financial services. The question is sort of when and how we're actually going to implement it. But I will tell you that over the last few months since we last spoke and our other symposium that we had around blockchain on the East Coast, that we've started to move a little bit from experiments and proof of concepts into trying to work out timelines for production capability of this. And in doing so, with our peers and with other partners, we think that it's something that we might be able to implement here in the near term.
So basically the way the average person out there should think about how blockchain can transform is that it essentially, whenever there's a transaction that involves a middleman, it could really save because you can displace that middle person. So in the long run, I mean, right now it's saving banks money, but in the long run, is blockchain more of a friend or a foe to the financial services industry?
Yeah, it's a good question. I think it's very much a friend. There was a lot of talk in the early days about, is this going to disintermediate banks? I think it's actually the opposite. It should make more efficient and more important banks who are the centers of the financial services institution and these trades. Quite often the question we get is, when will the blockchain hit Main Street? When will my grandmother or your mother use the blockchain? I think a good example of this is we've been working on some innovation with the blockchain around intra-bank liquidity. Let's say you go to an ATM to withdraw some cash, but the bank that you go to is not your own bank.
Right.
That creates a trade, an obligation between that bank and your bank. And if you aggregate those transactions that happen over a week, day, or a month, that's hundreds of billions of dollars. If we're able to do that with the blockchain, it will make the system a lot more efficient, and I think could be used on Main Street.
So basically you're asking a bank to owe another bank money, but with the blockchain, that can happen more seamlessly.
That's right. And it actually gives you greater visibility. I think this is what's important for regulators too, is that they have the ability to be able to look on a real-time basis about where everybody's capital positions are. And that, I think, is one of the most important things. But this, efficiency, operations, speed, and regulatory compliance, and being able to generate greater return on equity for our shareholders, that's what we've been focused on around blockchain.
James, great to speak with you again.
Thanks, Melissa.
James Disney, Credit Suisse.